you really evolve and change as a person from the age of 15 to 20. And I guess a lot of the mistakes and things I was doing wrong at the time sort of evaporated with time and just became more of muscle memory. There's no rule book on how this should be done. The market's they're not completely repetitive, right? It's never a one-to-one repetitive scenario. It's always different in some minor way, which is why experience is also so helpful, because you learn with time, I think, how you want to handle those situations, which are tough decisions.
Rightio, folks, we're on Trading Nut here. If you're thinking we've got a familiar face in the house, in fact, we have, but you probably don't recognize him, because last time he was on, he was 15 years old. It was Philip Blom. He had a video that went viral. We've had 4.3 million views on that video, where he breaks down a chart. We've got him back 5 years on to see if he's still trading, or in fact he is, but to see what those lessons are that he's taken across this 5 years of his life. So, Philip, welcome back to the show.
Thank you so much for having me.
So you're 20 years old now, which is ridiculous that we had you on 5 years ago. It just seems like the other day. I can't believe it's a teenager to a man. So let's start off with, what do you think about like the whole journey in the last 5 years? So you obviously were trading at 15. You were profitable at 15. Did you just carry on? Oh, yeah, I'm just going from strength to strength, or did you find there were roadblocks along the way?
Yeah, listen, it's a lot to process. It's a long time, and you don't even think about it until I get asked a question. But 5 years still trading. Still, this is my main profession. It's really all I do. And there's been plenty of mistakes and speed bumps along the way, but we're here, and planning to stay trading. So
yeah, well, look, we went through your interview just before, and you had actually had some fantastic insights even at that young age. I want to kind of dive in today and find out what makes somebody who was trading 5 years ago, even at such a young age, still maintain, I suppose, a trading career at the age of 25 years later. What were some of those things that may have changed? So can you think of things that you were doing back then that you aren't doing now, and what you sort of culled out of the way and got rid of?
Yeah, well, I think a lot of things come with experience and just time and maturity. Obviously, you like I mentioned before we started the interview. You really evolve and change as a person from the age of 15 to 20, and I guess a lot of the mistakes and things I was doing wrong at the time sort of evaporated with time and just became more of muscle memory, standard procedure. Instead of having to think about it, now it's more of, I just go through this process of analysis, and it's not like I have to think about it twice. It's just routine, right? That's the word I was looking for.
You've probably heard me talking about trading with confidence. And honestly, it's a lot easier when you're not risking your own money. That's why I wanted to mention Blue Guardian. They offer instant funding or a challenge to get you started, and up to $400K in funding, weekly payouts, and a 90% profit split. And they've already paid out over $15 million to traders around the world. Plus, they're sponsoring Birmingham City FC and Chris Eubank Jr., so they're serious about backing performance. Check them out at blueguardian.com or check the link in the description.
Because people talk about, and I think you talked about it, about time at the charts and time in the market to try and build that muscle memory. If you had to recommend for somebody to, who's gone, all right, I'm just getting into trading, I'm thinking this is the right career path for me, or it's a good way to make some side income, what would be your advice for them around, just spending time at the charts?
I've said this a lot of times to people that ask me, and I think that in order to succeed in this profession, it genuinely needs to be the financial markets have to fascinate you, and you have to be incredibly interested and passionate about what you're doing. And that's exactly what I was at the age of as a little kid, as a teenager, because every second I had of the day, I was I was reading, I was watching documentaries, because it came naturally to me, because I found it so fascinating. And I encourage people not to get into this if it's your main reason or objective is because you want to make a little bit of side cash. It doesn't really work that way, in my opinion, at least. So you don't want to start from the wrong end of the spectrum. You don't want to get into something just because you want to earn money. You want to get into something which you're passionate about and you can be good at. That's what I like to believe. So any tips? You have to be consistent, and you have to like what you're doing, and you have to like doing what I did at the age of 13, 14, 15. And that was staring at the chart, trying to solve the puzzle, trying to find that pattern recognition, and read and constantly learn, right? There's no simple tricks, there's no secret formula.
I mean, was there something you did, like when you were staring at the charts and kind of trying to find those patterns? Was there anything you were applying, actions you were taking, such as, drawing this on a chart or drawing that on a chart, or getting this set of data to then go, okay, well, that tends to work. Can you walk us through that?
Yeah, so I remember I would take a lot of screenshots. I would take a lot of notes back in the day. And I would always have the question in my head, what happened and why did it happen? The cause and effect. You always want to find that. And once you start to look and never stop looking until you find the answer, that's when real development, starts to take place.
So how would you say your trading's, well, I suppose the strategy behind it, which, I mean, like, we've had 4.3 million people have seen your strategy that you were using when you were 15. Yeah. Has your strategy evolved much from then? Because, I mean, you had an awful lot of things going on the chart. It did seem quite complicated. I mean, I think to the layman, I don't actually think it was that complicated. I thought it was kind of logical. Has it evolved and changed since then?
Absolutely. I mean, I have a system, and like I keep coming back to this pattern recognition thing. There is not like my strategy, if you like. It involves spotting a potential setup, finding confluences within a certain area, and it's not the same confluences all the time. It's not like my strategy is always looking for a 61.8 Fibonacci or a third trend line touch. No, it's more how would I describe this? It's more it depends on the circumstances of the market, so it definitely has evolved, and I'm having trouble even explaining how, because it's tough for me, but it does not look the same, no.
Right. Would you say it's more of an intuitive approach now, or is it still rules-based but intuitive?
Both. It's more like both.
And how big a part do you think Confluence is in an approach?
Well, it's all you really have, right? It's your confluences when you analyze the markets are your reasons to believe something will occur, right? It's hard to make a prediction or have a theory with a clean chart, right? Or no fundamental bias whatsoever. So to best describe the system I use, or my approach towards analysis, is that I have a couple of key components that I look for. The amount of technical confluences. So let's say you have this imaginary scale, right? And with your pattern recognition, you create this sort of calculated guess of what your probabilities of success are for that trade idea to go your way, right? And the more technical confluences you have aligning in one specific area, and the more fundamental confluences you have which also favors your bias, well, the higher probability of success that trade idea should have, right? I really think that makes sense. So we can go over a couple at the end here, but that's basically all I base my analysis on. So if I have, on the daily time frame, if I have a 61.8% fib, as well as, so we say price hasn't reached this area of interest yet, but at this little green box, let's say there is a daily 61.8, there's a third trend line touch, and there is also the 200 daily EMA. So those are three quite significant technical confluences, all within a small specific area. So my thing is just that, yeah, it would be wise to put a buy limit there, right? And then you narrow it down, where you put your targets and whatnot, and etc. But that's basically it.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
I mean, it's when I ask the question, and I dive in here just for the guys that are out there that are fairly new, or even in some intermediate traders don't even get it, and they learn a strategy which is like just wait for all these things to happen and then enter the trade. Whereas, I mean, the confluence thing for me is very much a this is what every other trader's doing, right? Everyone else is doing this. So there's all these 200 EMA, as you mentioned, traders, all these trendline traders, all these Fibonacci traders are seeing the same thing. So therefore, you're adding, let's say, there's 20 EMA traders, 20 Fibo, and 20 trendline. So instead of having 20 other people backing your position, you got 60 people. And so the more confluence you got in an area, the more chance of it actually working, because there's more orders sitting there wanting to push the market.
Well, listen, if you universally agree on the fact that a certain area in the market looks attractive for buys, and you have millions of orders buying at that area, well, that's in your favor, isn't it?
And what in terms of that's obviously getting into a trade, but what about managing a trade? So, for example, I'm just thinking about this week. So this week, I sat down and I marked up some charts on a live stream and had all these levels printed, knowing the fact that that the US had bombed Iran, and there was going to be some fundamental stuff happening when the market opened. Now, my trade ideas were great until the ceasefire happened, and then all of a sudden, bang, the whole thing's out. I mean, one of them got triggered and was actually, I think it was 1 hour profit, and then the ceasefire thing happened, and the whole market just turned around. So how do you sort of manage positions?
Yeah, so the example you gave is obviously an unusual case, and that's no one can predict such things. But you just got to adapt, and you got to be monitoring everything all the time, and you have to set alerts, and you have to be aware of what could potentially impact your position. And then that's the whole pattern recognition thing. If you think a news event is coming up, for example, and your position isn't looking too good, you have to be able to feel what you want to do, right? Is it worth just closing it and calling it a day, or do you want to take the chances of the news events either going in your favor or against? And without a specific example, it's hard for me to say anything else on that.
So in terms of let's just say you're in a trade, what would you be? Are you going for a risk to reward? Are you going for fixed pips or fixed kind of points profit? What are you doing?
No. Well, the same way that I identify my entry point is the exact same way where what I do when choosing the take profit and stop loss placements. I want to you want to switch the roles around. So if you're looking for a buy on your position, now you want to flip around and think, okay, so I'm in a buy position. Now I want to identify an area where price is the most likely to reverse against me. So if you have identified that area now, a wise thing to do is to probably set your stop loss slightly below that, right? You know what I mean?
Yeah.
So if you're in a buy position, now put yourself in the shoes of a seller and try to identify where you think the sellers are going to step in. And then you have your take profit placement. And then same goes for stop loss.
And so for things for what about for a time when, like, say, for example, you're very close to your take profit and doesn't quite get there. This is where you're thinking sellers would step in, but it just turns around before that happens. Do you try and manage that position, or do you just, okay, it's going to hit my break even?
It all depends. Yeah, it all depends. There's no right way to answer that question. There's no right or wrong way. Like I said, if you monitor and you go through all of the confluences and all of the news events, and there is no reason, and you have to trust your analysis, of course. And if you find that there's no reason why price should, from a technical and fundamental point of view, why price should reverse, then I would keep it. I would let it run if I find no reason. But on the other hand, if my take profit it almost reached take profit, is starting to reverse, and I do see that it would make sense if this was the area of reversal, then you have to just be happy with what you have and close the position.
And are you the kind of guy that's just going to get in, stop, take profit, one or the other? I'm not going to move my stop to break even. I'm not going to trail it. Is that you? Is that your style?
No. I do adjust my stop losses for sure, and I adjust my take profits as well. It all depends, which is
okay, right. So it's very fluid. So it's a very fluid approach.
Yeah. There's no rule book on how this should be done. The markets they're not completely repetitive, right? It's never a one-to-one repetitive scenario. It's always different in some minor way, which is why experience is also so helpful, because you learn with time, I think, how you want to handle those situations, which are tough decisions.
Yeah. It's a hard one for people to try and get their head around, I think, in terms of it. Like a lot of people like things being black and white. Okay, this guy's a profitable trader. I just need to follow what he does and I will be a profitable trader. It seems logical, but the reality is it's just not that logical. It's almost illogical in terms of everything, right?
It is. It's the most subjective profession in the world. There's no like straight answer to anything. And another thing is that we can be two completely different types of traders, you and I, and the way we come to our conclusions and the way we analyze are completely different. And we look at 15 different metrics, but the final verdict is the same. Our biases are the same. So we have the same trade bias and we think the same thing is going to happen, but the way we got to that conclusion is completely different, right? So then it's like, okay, so who is right here and who is wrong? And there's no real answer to that.
It is.
It's not black and white, is it?
Yeah, no. It reminds me of things like if I was looking at one price feed from a broker, for example, and then I go on to maybe just a random broker on a TradingView price feed, they'll be different, right? So the candles will print differently. You'll see quite dramatically different candles. But then if you go back and actually, play out your, say you've got a mechanical-ish strategy, go and play that out and go, okay, could I have taken a trade here and won it? 9 times out of 10, you'll still have a profitable strategy, even though the candles are all different. Well, I mean, not all different, but there's probably 85% of the candles are the same. And then the other 15% are different. You'll still end up with a kind of the same result, which is very odd because it doesn't make any sense, right? Because you feel like, well, hang on a sec, I'm getting the wrong candle here. This mentor of mine's getting this candle and I'm not getting the same candle on my price feed. How do I match his price feed? It doesn't matter. It literally doesn't matter. Same kind of thing that it's fractal through timeframes as well, right? So you go down to the lower time frame, you're still going to get the same stuff happening, just at a much faster rate, and you may not be able to get in through spread and what have you. So yeah, it's an interesting one. It is very subjective for each individual. I mean, with that in mind, and if somebody was going to go out, we've already touched on the fact that they need to be fascinated by it. They need to be passionate. Yeah, assuming they've got these two aspects, what would be your recommended approach for them?
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
Discipline is obviously extremely important, and noting down your findings and constantly questioning yourself and questioning what you're doing and I would say that is the most important thing, to always be curious for more and wonder why things happen the way they happen. And when you keep on doing that, with time, you're going to end up, finding answers to certain questions, or at least being better at identifying these things that occur within the market. So that would be my main piece of advice.
And if you had to sort of fundamentally kind of address any psychological issues around trading?
You mean personally?
Yeah, if you sort of had gone, through questioning that and going, hang on a sec, maybe it's discipline, patience, whatever it is. Have you actually ever had to identify any and then go, well, how do I fix this? How do I sort of change myself so that I don't do this again? And what were the steps that you took if you did?
I think that also comes with time. That's what I realized, and I know it's an extremely boring answer to give, but I won't say that it is not I think it is a necessary phase to go through, experiencing all of these shit going on in your head, of having itchy fingers and constantly wanting to be involved and looking for something to get into, and being impatient with your setup and questioning and opening trades and then questioning if that was the right decision. That's absolutely a necessity to go through.
I tend to agree.
You cannot avoid certain things, and of course, in theory, it would be the best to avoid mistakes. But I feel like if you're going to develop and if you're going to reflect on yourself and learn and evolve, it's necessary to go through and make as many mistakes as you possibly can.
Yeah, no, I tend to agree. It is a time thing, right? It's the more of these you do, the more you realize that this is a problem, and then over time you just go, well, I just don't like doing that often. I don't like how I feel at the end of it, or I don't like doing it, and then you stop doing it and go, right, instead of getting the FOMO, I'm just going to sit on the sideline and happily let that setup play out and see it go into massive profit and be completely happy with it, which I think that is probably one of the hardest things people struggle with.
Of course it's hard, but at the end of the day, you want to wait until you want to be confident in your system of analyzing, and you want to wait for the markets to come to you, not the other way around. You don't want to chase you don't want to chase an opportunity that doesn't exist. You want to plan ahead. You want to be prepared. Identify your areas of interest, which I call them, set alerts, and wait for the markets to play into your favor, right?
Yeah.
So that's like, I obviously had a phase where I couldn't sleep at night. I was up till 5 a.m. because I was staring at the chart and the ticks and watching every single candle close. Whereas today it's like, I only check my phone if I get an alert on TradingView. So it's a phase which I used to have nightmares about this shit, and I know that it's the natural thing to do when you start out, to be constantly watching it and stressing, and you can't let it go. But like I said, this comes with time, and now the less time I spend on the charts, and the less time I actually spend looking at the whole thing, the better the outcome.
Yeah,
I prepare in time, I plan ahead, and then I let it play out, right?
Yeah, it is. It's because it's very true, right? It's like if you decide, okay, well, I mean, if you've got the opportunity to spend the whole day in front of the market, say, for example, let's say from the time you wake up to the time you go to bed, and we're talking like maybe 18 hours, you are probably better off just going, right, I'm going to pick this 2-hour period to do whatever I need to do at the market, then walk away. Yeah, you might need to manage some stuff, but I mean, that's you're going to be more optimized then versus going back in, unless you're very advanced and you're used to doing that, because you mentally, I don't think most people can handle that. That's what it comes down to. They can't handle having that risk on the line constantly throughout the day. I mean, I don't know what your view is on that.
No, of course I agree. You want to spend less time but do proper work, right? So if I were to give an example of what my preparation for the week looked like on Sunday, for example, so I wouldn't limit myself to a certain period of time, 2 hours, whatever it's going to take, however it's going to take. You just get the job done properly. So I start by going through the economic calendar, and then you just filter out what is interesting to you, right? You highlight a couple of key events that you think are interesting and might create opportunity in the markets the week ahead. Then you go on TradingView, or this is what I do. Then I go on TradingView. I highlight pairs that I see potential in for the upcoming week. I identify my areas of interest, so using these confluences. So, for example, I see that there is 2 news events for the euro for the upcoming week. The consensus is that both of them are going to have a positive outcome. Okay, that looks bright for the euro. And I also see that for euro New Zealand dollar, there is a area which have not been reached yet, and it has on the weekly time frame, that area is the 61.8 plus the 100 EMA plus 2 aligning, so one ascending and one descending trend line. So all of that in one specific area, okay? That is an extremely high probability or high probability of success trade. Okay. Then what I do is I make my alerts, or I go ahead and place the buy limits for that trade. And then I just let it be, right? And then I do the same if I find anything else interesting on other pairs, right? Alerts or buy limits, but the point is that I'm prepared, and once I've gone through all of this, once I've gone through my routine, there's nothing else to do. And then the only thing I do for the rest of the week is monitor that, or if anything else interesting pops up, do the same thing. So,
I mean, it's funny because you strike me as kind of quite a chilled, laid back kind of guy. Somebody who's going to take his time and go through things and do it properly.
Yeah.
How much of a factor do you think that is to being able to be a consistently profitable trader?
Well, everyone's different, and everyone's personality is different. I happen to be quite a calm and stoic person, so that definitely benefits me in terms of trading, because I don't go rogue, I don't go crazy. I'm also very good with patience, so that has definitely contributed to a decent trading career, I would say. Yeah.
So yeah, I mean, I think for somebody who's completely the opposite, which I think I'm kind of like more in the opposite camp, unfortunately, what would you recommend from to try and, I suppose, turn the wheel around so that they can become more stoic, more patient, where these things start to become more of a natural aspect of their life, or at least in front of the charts?
These are good questions. I never thought about these, What can someone else do that struggles with it? You have to set rules, and you have to discipline yourself. You have to be disciplined, and you have to be able to be true to your word. So let's say that you find that you have two itchy fingers, and you constantly want to enter trades. So let's say you make a rule which you have to follow, which is limiting yourself to 1 or 2 trades a day if you're a scalper, let's say, and just sticking to it,
So I think for these kind of people, that's probably going to be the hard thing to do, is how do I stick to it? Folks, if you want to have a look through some of the other interviews, we've actually covered this topic before, and I think the last one I've just got launched, the guy he had a little sort of, I think, peace fingers or whatever, sign on his desk, which reminded him 2 trades only, and that's it. It's done and dusted. So we're going to dive into it just quickly before we wrap this interview up. So some of the, I suppose, technical aspects of what you're doing. So how many markets are you analyzing?
Only the FX and gold.
And are you trading through a broker or a prop firm?
Broker, yeah.
And how many trades do you estimate, like, per week would you take?
Really depends. I'd say on average, if I would look through my app, I would say around 1.5 per week on average, if you take a look at the past 2 years.
And risk to reward ratio on average for your trades, do you think?
No idea. I couldn't tell you.
No idea. And what about like a approximate win rate?
Oh, I actually have the statistic on that. It is, it's on my Instagram story. It was above 70. It was above 70.
Okay, cool. Yeah. All right. Well, look, folks, what we're going to do now is actually dive into a price chart. So if you do want to go and see that, we'll pop up another video here on the channel, or if you're in the podcast, go and check the description. Philip, great to have you on again and see where you're at 5 years on. Maybe we'll do it when you're 25. Who knows if I'm still going to be doing this at 25 when you're in 5 years' time. So what is the best way for folks to find out more about you?
So I have only through Instagram or my website, which is kingforex.com, where you can find an email address, or otherwise it's my Instagram, which is Philip 2_ BLOOM.
Cool. Folks, what we'll do is hook a link up under this video to the show notes page. You'll be able to find that and the other video. Whilst you're down there, hit subscribe, like, and that notifications bell, and we'll see you in the next one.